Please, thank you. We have a lot of great political leaders and the biggest political leaders around, I guess you could say, but by far much bigger are the business leaders. It's not even close.
Welcome back to Investinality, where storytelling meets smart investing. Today we're unpacking key moments from President Trump's recent Investing in America speech. Let's look at what was said and, more importantly, what it means for your wallet and investment strategy.
And this week we're celebrating the most successful first 100 days of any administration in American history. We're thrilled to welcome to the White House dozens of the world top leaders of all kinds, but in particular business leaders.
This opening sets a tone of accomplishment and high level engagement. As economists, we judge success not just by excitement, but by real indicators like GDP, which is gross domestic product, which is like the company's financial report card. Think of GDP as the total price tag of everything a country makes. If it goes up, people and businesses are generally doing better. And when the room is full of business leaders, it usually means one thing: investment.
Since the election, the companies represented in this room have collectively announced more than $2 trillion in new investments, and we have a total of close to $8 trillion all told.
$8 trillion is a massive number. But what does it mean in practical terms? Business investment, whether it's a new factory or software upgrade, is one of the engines that drives our economy forward. Imagine if 5 new restaurants were to open up in your neighborhood. It would mean more jobs, more activity, and more value added to your local economy. Now, let's explore what's encouraging these investments, starting with the role of tariffs.
I think two things happened. November 5th happened, and November 5th gave you tariffs, intelligently used tariffs and various other forms of incentive.
Tariffs are like toll booths on imported goods. If you want to sell something to the US from another country, you might have to pay extra. This can push companies to move their operations to the United States to avoid these fees. Think of it like paying a daily parking fee that's so high that you decide just buy a garage. With trade tools like these shaping decisions, Trump's next point shifts the conversation towards a deeper patriotic theme.
Together, we're going to bring back the most beautiful words. I always say made in the USA, the most beautiful words. We're going to have made in the USA like we haven't had before in a long time.
This line connects emotionally, but also ties into an economic strategy known as reshoring, bringing manufacturing jobs back to the United States. It's like choosing to cook at home instead of ordering out. You may spend more time and money upfront, but you have more control and reliability. From an investment standpoint, this means more factories, more jobs, and stronger domestic supply chains. To see these in action, let's take a look at what one major company decided to do.
Even Samsung, whose name isn't mentioned here, but I heard that they announced this morning that they're going to be building a very big plant because they want to be able to beat the tariffs. It's the only way to beat them.
This is tariffs at work in real time. When companies decide it's cheaper to build in the US than pay import fees, that's policy influencing behavior. Think of it like switching your online store's warehouse to the same city as your biggest customer, faster and cheaper. But tariffs aren't the only lever for encouraging growth. Another is tax policy, which we'll dive into next.
And in the coming weeks, we'll pass the largest tax cuts in American history. And I think even more so, we'll be doing things for business like you've never seen before.
Tax cuts put more money in the hands of businesses, which they can use to hire workers, buy equipment, or expand operations. Picture a small coffee shop. If it keeps more of its profits, maybe it adds a second espresso machine or hires another barista. The idea is that growth at the business level eventually lifts the whole economy. Let's now look at a more technical but powerful piece of that policy: full expensing.
But our big, beautiful bill, as I call it, our big, beautiful bill, we may name it that actually, will include 100% expensing retroactive to January 20th. So that's all the way back to just about the beginning of the year. So expensing 1 year, you take a deduction 1 year, so you can build your factories right now essentially almost tax-free if you think about it.
Expensing means businesses can deduct the full cost of a purchase right away instead of spreading it out over several years. It's like being allowed to claim your entire car payment on your taxes in the same year you buy it. This helps businesses move faster, especially in capital-heavy industries like construction or technology. But tax incentives don't just help customers, they also reshape global decisions, especially around profit.
I lowered the rate substantially, but still a lot. We shouldn't take your money just to, hold you hostage, right? So we lowered it to a reasonable amount, and we took in trillions of dollars came back. Apple brought in a tremendous amount of money. A lot of the companies here brought in a lot of money, and
This refers to repatriation, bringing home profits that were parked overseas. The reason companies kept money abroad? High taxes. Lowering those rates is like offering a discount on tolls to get drivers to cross a bridge. The result? More domestic spending and investment. That flows right into our next point, how energy policies play a role in keeping those investments profitable.
when Jensen and some of the others came in about numerous of the others, especially having to do with AI, they came in. I learned a lot. Number one, I learned we need double the electricity that we have right now for the whole country, and really more than that. I mean, two times would be even better. It was like unlimited thirst for electricity.
Energy independence gives the economy a major advantage. Producing energy at home means fewer imports, more jobs, and more stable prices. If you've ever worried about gas prices shooting up because of international conflict, this kind of policy is meant to reduce that risk. As we wrap up, let's look at one more economic ripple effect that touches every household: inflation.
The prescription drug prices just saw the largest monthly decline ever recorded. I just see this number just came out. It's the largest monthly decline ever recorded. Yeah, but it's probably about 2%. You know, they did that to make me feel a little bit better, but I appreciate it. We have achieved the lowest number of illegal border crossings in U.S. history, and we're at a level that nobody thought we could get to in 2 years, let alone a couple of months.
These claims connect to cost of living issues. Lower drug prices means lower out of pocket expenses, which boosts consumer confidence and frees up money to spend elsewhere. Meanwhile, changes in immigration policy can affect the labor supply and, in turn, wage dynamics. And just like that, we circle back to what matters most: how policies impact your paycheck, your expenses, and your future financial decisions. If you found this analysis helpful, hit like, subscribe, and drop a comment about which quote caught your attention the most. Thanks for watching, and I'll see you in my next video.
So thank you very much, everybody.